I'm joined now live from Sydney by Gavin Stacey. He's Chief Rate Strategist for Australia and New Zealand at Barclays Capital. So welcome to you, Gavin. Tell me, was this the right move by the RBA? Can they afford to sit back, wait and see, especially given the wage inflation that you're seeing down under there?
Well, good afternoon. I think the RBA has been preemptive. It deserves a little bit of time to assess the situation. But if you look at their own forecasts, they're forecasting a pickup in underlying inflation. They're forecasting above-trend growth. So I think they're going to start thinking about hiking interest rates again at some time here. When will that be? Well, traditionally, the RBA looks at its underlying inflation forecast, sees a pickup in that underlying inflation forecast, and then responds about 9 to 12 months ahead of schedule. So I think roughly before mid-year would be the timing for that next rate hike. April? Well, I think today's statement would kind of suggest that doesn't look as likely, because the RBA tends to like the market to front-run its actual rate decision. They feel as though they get more bang for their buck when the market has sort of had a few weeks at least to digest the rate move. So probably not April, but May is still alive, I think. Okay. Let's talk about the international factors that may have weighed on this decision. I remember last year a lot of outside factors were weighing on RBA decision-making given the fragile state of the global economy. Recent events in the Arab world, the spike in oil prices, rising food prices around the world, how will those factors have weighed on today's decision? I think when the RBA has used an offshore event to delay a policy decision, I think when that event quickly passes by, I think often the RBA's gone, oh, well, we should have actually acted on it. So I suspect it's not really holding up a rate decision at the moment, the Middle East. Our suspicions are that it's more the uncertainty about the China slowdown scenario which is weighing on the decision, or it actually could be that they're not sure that their underlying CPI forecast is the appropriate one given the downside surprises we've seen in the CPI over the second half of last year. Where do you see commodity demand going? I mean, we have Warwick McKibben, who's a member of the RBA, saying that Australia is getting caught up in a bubble in international commodity prices, also property markets in Asia. He says that it could hit much harder than the global financial crisis. What do you think? Well, I think the commodity prices are simply responding to the fact that global policy is very accommodative. It's clearly led by the Fed, which has had its QE, interest rates at zero, but all other central banks have been fairly accommodative as well. So commodity prices will continue to rise up until central banks start tightening policy. A Fed tightening seems to be some way off, but at Barclays we're actually thinking the BOE, the Bank of England, the ECB are going to start thinking seriously about rate hikes. Maybe that will start to weigh on the commodity story. All right, well, let's return to the domestic picture in Australia. We've got GDP figures coming out for the fourth quarter tomorrow. What are you expecting there? I think after the partial indicators we've had over the last couple of days, something around 0.7, 0.8 on a quarterly change basis would seem logical. In general, when we're thinking about Australian growth, really we need to look back at where the global economy was about 6 months or so ago. On that front, we had a global economy which had a mid-cycle pause. That mid-cycle pause has now proved to be rather fleeting. So Australia may have another quarter or so of weakish growth, but 2011 is looking a lot better, we believe. Gavin Stacey of Barclays Capital, thanks so much for being with us.